should we buy or sell natural gas? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. Natural gas is here. It's in the fossil energy space. 91% from the 52-week low, 35% away from the highs. We will use this chart. It is not the classical chart I use. It's because investing.com they are having some technical issues. Hence, we will use this instead. We don't get all the data I usually get. I am certainly considering getting a full, a big boy subscription on TradingView. Um, you know, well, if I can get something for free, I will. But sometimes you might have to buy, and there's been a lot of issues, with investing.com. So yeah, I might just make the plunge because TradingView, they do have these good deals on Black Friday and also Cyber Monday. Maybe they will have a Halloween deal as well. So let's see. But anyway, here is natural gas futures from NYMEX, weekly data points, big picture. The super important moving average, the all important green 50-week moving average is in play. It was a huge deal there as resistance, support, buy, 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 and is this also a buying opportunity? That's to be determined. The last time we tested the green 50-week moving average, we got pretty healthy 85% gain. That's nice to get, you don't always got to get those gains. So yeah, natural gas, it's cooled down to a key support level. This is very, very, very interesting. This is a huge topic, of course. Yeah, there's been all kinds of issues with the energy situation globally. So I mean, it's very hard to look at this chart and not be like, okay, this is a bullish opportunity. On the daily data points, you have the red 200-day moving average, but you can see here that price has a messy relationship with that moving average. It was not as clean as what we saw with the 50-week. There are some signs here of rounding bottom-ish behavior. So there is something afoot. But the number one signal now is definitively the green 50-week. So in my notes, I write 50 weekly moving average support. I give the bulls an 8 on the technicals, so super bullish. But of course, that is contingent on price staying above the 50 weekly moving average. If we were to close below it, obviously that 8 would disappear. When it comes to natural gas, there is an ETF for it called UNG. So you can get exposure through ETFs and ETNs. Let's look at the seasonality for natural gas. To the right here, over the last 10 years in red, 7 years in blue, 5 years in green. The seasonality is messy, but overall it is actually bearish into late November. To the left here, over the last 5 years, from October to December, it clearly deteriorates. Over the last 10 years, it becomes messy because then it gets stronger into November, but December is actually a bit of a weak month, and January and February are also weak. Big picture, last 20 years, October, which is the current month, so it's still very much relevant, it is the second strongest month. Big picture. That is bullish, and November is not weak, but it's weaker. But December is a very weak month. January and February are also weak. So I think I will give the bulls a 4 here on the seasonality, with the caveat that there is the probability that this will be more of a trader opportunity than an investor opportunity. The seasonality least suggest that. So yes, we are approaching key moving average support. We could get a bounce, benefiting from that seasonality, but there is this typical weakness. But you could make a very strong case here. Coming to the fundamentals, I think I will give the bulls a 3 here, because the current geopolitical situation should be very favorable to higher natural gas prices, and that the unique situation could just override all of that historical tendencies for the coming months. So, because there are these technical issues with investing.com, I'm not able to get those correlation studies that I usually get. But I do know that there's a pretty clear correlation between natural gas and crude oil. Here we have these two. What is very interesting here is that they clearly move in this range. Here is the bottom of the range, here is the upper end of that range. So the range itself is very tradable. We currently see some weakness from the upper end of the range. You look here at RSI, this usually is a point of rejection. We are approaching an RSI territory where there could be support. The caveat here is that if we look here at the price relationship itself here, we have a tendency to explore the lower end of the range after rejection from the upper end of the range. However, to be clear, these are relative comparisons. We could easily have a situation where natural gas and crude oil go up, but let me draw it in, where something like this were to happen, which means that natural gas is slightly underperforming crude oil, possibly. So yeah, both could go up, even though it seems like one of them is going down, but it's only relatively going down. Looking at the seasonality, it suggests a weakness from natural gas all the way into late November, but that is when natural gas usually begins to outperform crude oil. In this case, I think I will give the bears a -3 here on relative performance. However, we do end up with a 3 in favor of the bulls. 50 weekly moving average support is the big deal at this point. It's an extremely interesting opportunity, and we know exactly where to put on the stop as well. So it's one of those easier trades to make. So we have some time left to run through all kinds of different charts. So let's stick a bit to energy related securities. So let's look at ExxonMobil. What's happening here? There's strength. So if you have a position on ExxonMobil, then this is of course good. But would I buy this at this point if I did not have a position? The problem is that we are in this prior rejection territory. Obviously, we could get a breakthrough, which is bullish, but I don't like buying these kinds of setups if I don't, when you don't have any position. If I bought low and have a bunch of profits from those low buys, then sure I could add them to my position here, but that's a different setup for that account. I don't have good experience, frankly, buying the potentiality of a breakout. Okay. Next, let's look at let's look at NiSource. NI. Let's get NI like that. NiSource fallen down to it's a level where there could be a support. In terms of RSI, we are not at screaming support yet, but close. So it's interesting. Let's look a bit at the daily data points. I mean, you can clearly see that we have gone from like ferocious bearishness here. This is just extreme bear. Now it's not really going sideways, but sort of going sideways-ish. So there's a bit of a change, but nothing like really bullish yet. Let's look at first solar. Seeing some substantial strength. It was extremely viable here at the red 200-week moving average. Um, but it did get very, very overbought here on the weeklies. So this pullback is just very much to be expected. So currently this stock is simply just in pullback mode. Yeah, very much a rounding top pattern here. Let me just draw it in. This is very rounding top-ish. But yeah, I mean, trading view is also a bit annoying here. I'm not the one, going full screen or not here. So yeah, so it seems like there's technical issues all over the place. So maybe because the thing is that investing.com, they do use the charts from TradingView, the technology. So maybe that is the culprit. Okay. So that's something. Okay. CCJ, let's look at uranium. So this is, Cameco Corporation. So we do see a surgical test of the blue 100-week moving average. That is interesting. That is very much interesting. When we go back here, there is interaction between price and that moving average. It's not squeaky clean as a support level. It was a bit clean as resistance here, but not squeaky clean. So it's one of those indicators that's very interesting, but not. It doesn't make me put on any kind of big position based on that indicator alone. A bit too noisy, but we do have horizontal support here as well. Also some RSI support. So yeah, Cameco, it looks it's interesting. Here Ocean Power Technologies. Yeah, sort of seeing a bit of a sell-off. I guess one could say, looking at the weeklies, you can almost not. You have to zoom in, to. Yeah, it's just down a lot. Here are the daily data points. We are below all the moving averages. Yeah, it's definitively in a downtrend. Um, the funny thing about these kinds of stocks is that when they do have a rally, you can make these huge gains quickly. Like just to get up here would be 16%. Here, all of a sudden, we jump to 80% gain to go up to this level, and to go up to this level here, 132%, and to go up to this prior level here where we have been in the past. So there's precedence, 240%. And even getting up there, we still would be pretty far away from the highs. So some of the biggest gains definitively can come from these kinds of stocks, but these kinds of stocks are also where the volatility is so ridiculous that it's very difficult to put on any kind of stop positions, and that to put on like a stop, at least in the beginning when you have like a gain on these kinds of wild cards. Then of course you could put on some trailing stop or something like that. But even then, you could easily get stopped out with the gain, that is, before you really wanted to, because the volatility is just so strong. If you look here as an example, if you look at this rally, so let's say that you bought the 200-day moving average. Here you would have 131% gain. That is very good. But if you have like a 10% trailing stop, you would get stopped out. Here all of a sudden you are stopped out. Later on, it would go up here, and the max gain at this point over here is 840%. So one way to handle it is to divide the position into various trailing stops, and when you have a substantial gain, then you could have like a part of your overall position that is without any stop. That would enable you to get these hypothetical super gains, because especially now in the age of zero commissions, there's no reason anymore to like close out your entire position. If you are going to close out, you can easily have like literally like one stock left. Obviously one stock is not that much, but you can, there's no reason really not to. And that's the story of people who traded Bitcoin, and then they sold everything. There's no reason why they had to sell everything. They could have had a bit of a position left and then participate and get those very big gains that would later come. So yeah, commissions are very bad, but now it's easier than ever to get those very juicy gains by dividing your overall position into different stop levels. So whatever you do, of course, you do want to have a market neutral portfolio. Always have stop levels in place. And go to diamondarm.com to get more intel.